Now, here's Elizabeth Warren's dire prediction in a post she titles, quote, "The Coming Economic Crash and How to Stop It." Warning lights are flashing. Whether it's this year or next year, the odds of another economic downturn are high and growing, end quote. Now, Warren goes on to lay out some of her own plans, but ultimately calls on the president and Congress to regulate the financial sector and reduce middle-class household debt. So are we really on the brink of an economic crash, or is she just trying to scare people and push her own economic agenda? What do you think?
David, this is an incredible example of misinformation gone wild. This piece that Elizabeth Warren put out has a whole lot of facts and statistics, none of which in the aggregate really lead to the conclusion that we're even close to a recession. For example, and I could go paragraph by paragraph, obviously I won't. She talks about how household debt is at a record level. Okay, household debt grows when the economy is growing. And guess what? Household assets are also at a record level. In fact, over the last several years, the balance sheet for the consumer has improved. I could give you 10 examples of why she has basically alarmed people about the state of the economy. Why? Because she is viewed as more savvy on this. She's more pro-regulation. She knows more about regulating the financial sector than most of her rivals. And this is her way of getting attention and kind of going back to the playbook that brought us all to know Elizabeth Warren during the financial crisis.
Fox Business Alert. I'm actually agreeing with some things she's saying. Corporate debt is out of hand.
Because
household debt is out of hand.
interest rates are low,
but
Gary.
Hold on. Interest rates are being manipulated and rigged low by all the central banks. But the one thing she does not mention is the government debt. $22 trillion of debt foisted upon an unwary taxpayer through the years and trillion-dollar deficits. She blames Trump in a little missive but says nothing about Obama, $9 trillion of debt under him. Listen, debt is going to end up killing the goose eventually. I don't think it's imminent, but she is right. It is something that has to be watched and looked at. And the fact of the matter is the central banks have been enabling it across the globe, and it is worrisome for me.
I was just going to say, I think Gary is hits the nail on the head here. Look, I mean, Elizabeth Warren might be right, but not for the reasons that she says she's right. It's not, private debt or even unregulated capitalism that causes booms and busts. It's always government intervention. I mean, you could go back to George Bush in the ethanol boom bust that he created. We're seeing it now with everything from minimum wage to increased regulations of financial services companies and the internet. So if you want to know what's going to cause the recession, it's not greedy Wall Streeters, as Elizabeth Warren would say, but it's intervention in the private markets. And Gary, to your point, the Federal Reserve is a big part of that as well.
All of you have wonderful points. Liz, the fact that the economy is growing, 121 months. You're seeing unemployment. We haven't seen it at levels since 1969. More jobs than people are searching for at the moment. The stock market up almost 20% year to date. All of these positives. However, we are in a moment of expansion unlike any other where inflation is relatively low, 1.6% on average. It's very difficult to pinpoint the risks. Economists are scratching their heads. I think it's concerning that global manufacturing is down for the first time in 3 years. The interconnectedness of firms all across the United States and the globe is great, because that means that certain sectors won't perish. But at the same time, if something is not going well in Europe, it could affect us. And then the bond market, too. None of you guys have mentioned the bond market.
Curve, of course.
The 10-year...
Well, and Elizabeth Warren mentioned that
She
as well.
does.
Okay, so to her point.
And it has been totally debunked as a predictor of the recession for about the last 10 years. That has been a very inaccurate measure. Again, you could go point through point that she raises. Gary, to your point, yes, corporate debt is very high. If you're a CEO and you're looking at selling stock, which is expensive in terms of your rate of return, or issuing debt at 3% or 4% or something like that, you're obviously going to take the debt route, and it's cheaper. That's why we have such a mountain of corporate debt at this point. It does not necessarily mean it is dangerous. And, Kristina, to your point, yes, we have a very long-in-the-tooth recovery here. This is unprecedented, right? Record level. So, yeah, the economists are saying, well, there's been a downturn.
Let me push back a little bit on Kristina. You can pinpoint the risk. It's staring you right in the face.
What?
250. Let me finish. 250 trillion of government debt around the globe. This will not be able to be services when all said and done. This year, 550 billion of our tax dollars, the first 550 billion, is going towards interest. If this trajectory is not changed, there is inevitability. And unfortunately, both parties have been doing nothing about it. Both parties are head in the sand. Why? Because spending is the mother's cow's milk for them. It makes everybody happy.
I have to ask you about her solution to all of this, which is more government spending. As Gary said,
more government.
She doesn't mention government debt. And you look at all of her free tuition, more subsidized housing, subsidized rent, which seems to be a new one, universal child care, universal health care, doubling the minimum wage. I mean, what about her solution, which seems like more of a problem?
On both sides of the spectrum, when you propose a moderate solution, it doesn't get votes. It doesn't get us talking on television about it. And so that's what she's doing. She is providing the left answer, just like on the right side, they would do the same thing. And to your point before about debt being cheap, if anything, we should be concerned, like Gary has raised, that this financial system is addicted to cheap money.
But wouldn't a moderate solution be some cuts in government spending?
It ain't going to happen in an election year. It ain't going to happen in an election year.
That's something we never think about.
All right.